All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for August 5th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 441. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have welcome to Sunny Harris of MoneyMentor.com, be our guest today, and you should be seeing her charts right now. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, thanks, David, and welcome everybody here. We're certainly getting a lot of volatility in the last 2 months, so we're going to talk about it here today. I'm going to talk about the markets first right now. Let's, if we could, put up the S&P. Sunny with us today, of course, is Sunny Harris of Money Mentors, and she's going to go over her background and all that a little later in the broadcast. But right now, we're going to get right into the markets, because especially so they are so active today, and people are probably wondering what the heck's going on. So yeah, before we get started on the technicals, which we're going to focus on, I just want to throw a little fundamental out there that people might want to know about. And basically, the big things going on right now is the SOM rule, which basically is where unemployment rate goes up 0.5% higher than the 3-month moving average. So basically, you got a 3-month moving average, and then you've got the lowest 3 months moving average in the last year. And so if the current 3-month moving average is 0.5% higher than the 3-month lowest moving average for the year, according to this lady, Claudia Somm, it means that we're having a recession. We're either in one or one's on the horizon. So obviously that kicked in on Friday with unemployment report. So now you know why everyone around the world is going nuts on the sell side. Of course, the technicals we'll talk about with Sunny, but some people would like to know a little bit of the reasoning behind such a dramatic move. Now, the ISM manufacturing is already way into contraction, which is recessionary. And the services had dipped into it. But one of the reasons the markets had some a little life in it is at 10 o'clock Eastern, they announced that the ISM services was at 51 and change, which means it's back into expansion. So that kind of got people a little bit wild here. And one last thing, this Claudia Somm, who's an ex-Fed governor who created this thing, she also questions its validity because of the COVID hoarding of employees, which she thinks might skew the stuff. But it's a 13-0 record since World War II, and I'm certainly not going to snuff at that. But clearly, 4% in change unemployment and the participation rate of 84% of prime workers. These are not terrible numbers yet. But obviously the market with the computers and the algorithms, they're just tanking the volume here. And obviously people like Citadel who make markets, they're just going to drop the bid until the volume drives up. So that's the backstory, and the big question is a recession here already? And are we going into a worse one? Or is this just a typical reversion to the mean? Now, we're going to talk about a little bit of the technical picture here with Sunny. And Sunny, let's start out with what you're seeing. I know you had some great success in your trading room today. That was great to hear. But let's get your idea. Really, I mean, are we reverting, or is it game set match? Really?
And there's no way to tell. No way to tell until we have some more information. As I always say, let's see what the next bar does.
Now, I'm watching the SPX. So can we put up SPX? I mean, I know you got the future up there, but I mean, do you have SPX as well? Because that's the cash. We know the future obviously is not the cash.
I'm having trouble today with TradeStation, so let's see.
Yeah, well, if you don't have it, we can work with the future.
Well, I don't even know for sure if I can get that back. Let's see.
I should have kept my mouth shut.
There we go. We got it back.
All right, so we'll use the future, okay, and I'll put up the September contract, which is what you're trading on, and then we'll use that, and we'll use that as a parameter, and maybe we can share ideas on how our tea leaves are reading it. So let's talk about yours. You got the sunny bands here. Quick explanation of the sunny bands, and then let's get into it.
Sunny bands are based around my dynamic moving average, which is the purple and gold line that's going through the center. And this dynamic moving average was created because I found that all other moving averages gave me whipsaw and I would lose the money that I made in the trends, and it just aggravated me to death. So I spent 18 months programming and researching and testing and developing the mathematics of this thing. And what it does is calculate its own lengths. So instead of the default 9 and 18, 9 being the short-term average and or the fast moving average, if you will, and the 18 would be the slow moving average. With those two values in there, you get one set of moving averages. But mine calculates its own values for that, and they change with every tick of the market. Then the sunny bands are the green and blue lines that you see around the dynamic moving average. And these are ATRs from the dynamic moving average, so they are therefore dynamic as well. And it's 2 ATRs and 1.2 ATRs from the dynamic moving average. So you can see over here to the right, I also have the 255 and 21 moving averages on there. And you can see over to the right that we ticked right down to that 200.
Mm-hmm.
Pretty exciting.
Yeah.
And then we are now moving back up. We're still down. Is that 800? Oh no, it's 963 points. So we're still got a sizable move down, but it was 1200 at this low on the Dow.
Yeah, but we're talking S&P right now.
I know.
Yeah.
So this red vertical line that goes down like this shows where I went short. And that is a Sunny Bands sell signal. So it's got the setup and the trigger. And that's where I went short. So on my stock holdings, I mean, a couple of people have asked me how I did this. I sold everything I had that day. I went into cash, and just fortunate because Sunny Bands told me to do that, and the stocks are all down sizably.
Yeah. And that is pretty logical also because, you know, if you hold, and I was trying to explain this to people, you know, if we're going to have a reversion to the mean, that means you don't have to worry about missing out on any big up move. And so when your indicators and the stuff that I was looking at, you know, clearly told you in the 5600 area, you know, that the tide was changing.
Mm-hmm.
You don't have to worry about 5,800 or 6,000. So, you know, that's the time to go to cash. And then, of course, you know, lock in some or do some hedging, you know, sell some calls and buy some puts or replace some of your positions with limited risk calls, just something to protect your equity.
Mm-hmm.
Otherwise, you know, you're caught in this big downdraft, and nobody likes to see their accounts drop, no matter if they're a retirement account or not, you know.
I don't like it at all myself.
Yeah. And this neighborhood that you mentioned, you know, I have a corresponding moving average at around 5173. The low, I guess, was 5120 today.
Looks like it's the 200 moving average. Yeah, it's below the 200 average. So it looks like 5120 or something. I can't really.
Yeah, I think the low here was 5120. I have an average that comes in at 5173 that's rising. And we're back above that after the ISM services said we're not contracting. So that's a positive. If you're looking for a green shoot, I think, you know, being above 5173, do you have any concern for that number at all? Or you're pretty, what's your gold mine coming in or?
Well, I'm just, these lines are what I call attractors, these orange ones.
Yeah. Okay.
And I draw them at confluence of price action. So here was a low.
Right.
I drew an attractor. Here, the DMA is flat and prices go up to it and back, up to it and back, up to it and back 5 times. So that's an attractor to me. So I drew that one. And here we got a bunch of tops that hit this level and don't go anywhere. Over here, the same thing. Here, they used it as support. So that's another attractor. So I draw these things in. These were drawn in weeks ago, weeks and weeks ago.
And are we looking at pretty much a 6-month time frame?
Well, let's see. This is a daily chart and it goes from March of 24 to current.
So that's more like
See,
three.
I can do this with TradeStation and bring on more data.
Yeah, because the charts I'm looking at are like 1 year graphs. And then where I got some support is off a 5 year graph.
Well, a 5 year graph, I'd have to bring up a weekly to
Yeah.
get to get
Yeah.
that.
So why don't we, because like I say, when you go through, as you obviously can see, all the short-term support has been decimated.
Yep.
What I do is I go to my longer term graphs and find out where that support is,
Oh, I do that too. Sure.
and I use those numbers as a threshold of where we might stop. And one of the numbers I had was on my 5 year graph at around 51.73.
Mm-hmm.
And on my 20 year graph, I mean, everything else means to me, there's another 200 S&Ps coming off easy.
There's that one. That's a monthly chart, so it shows back to June of 11,
Yeah.
2011.
Yeah. So my 5 year is kind of showing that if we can hold above this 51.73, that maybe a bounce could happen because those moving averages on the longer term graph, as you see, they haven't inverted to the downside. They haven't turned over.
No, they
That
haven't.
tells now. I'll tell you what that tells me, and then you tell me what it tells you. That tells me that the trend has not turned down on a longer term basis, and that this could be a growth scare, and this growth scare may have an end to it here in the short run.
Yeah, I don't think that. I think it's going to go on down to the DMA, which is down here at 49.45.
Yeah, without a bounce.
Oh, I don't know. It could bounce tomorrow, just like people coming in and saying, "Oh, good, it's cheap. I'll buy some."
Yeah,
I think in the next week or two, it'll come on down to that level.
yeah, yeah. But if it was to bounce, a number that I'm kind of looking at as a possibility is the 51.74. It was penetrated by 50 points, so that's not a good sign. But the average is still rising,
Mm-hmm.
and it is a 36 SMA, so it's a longer term one. So sometimes that can be a situation.
Mm-hmm.
And I'm also looking at a VIX, which is very important to watch at this point to see if it might be running out of steam. And the VIX today, just to give you an idea, and of course, I'm a VIX follower being an option professor. I anticipated that it was going to spike up after earnings like it did in April, because in April after earnings in March, it went from 13 to 21. Now we started out in the 11, 12 area. Once we got above 15 and once we got above 20, it was going to go up. Of course, I didn't know it was going to go up in such a linear fashion. But in this day and age, with the computers running the show, this thing starts breaking. There's no specialist in there anymore putting their money up. Don't you
Yeah.
think that is a big difference? Because you've been around for a long time as well. Do you remember when we had everybody on the floor?
Oh, yeah.
Sometimes the specialist would be down there buying stock or stabilizing price.
Right.
Now there is just computers running the thing, and so if Algo's put in, sell 10 million shares or something,
Yeah.
the other side of the computer is definitely going to drop the bid.
Mm-hmm.
So and
I noticed
we
this
went to
morning.
65. We went to 65 today on the RSI, and it's at 33. So that might indicate that today's action was a blow off. Do you see what I mean?
Yeah, but it's still above 20.
Yo, no, it's way above 20. I'm just wondering if this 51.74 is going to be let's call it a subway strap hanger to hold on to
Okay.
before the train starts moving again.
Right.
Yeah. But like you say, yeah, I mean, those targets you were talking like in the 4900s and stuff on the S&P going back there.
Okay. Well, let's see. Yeah, it's not ES.
ES, yeah.
Yeah. So I think we're going to come down into here, which is
Yeah.
49.90 or something.
Yeah. I think that's the 200-day on the S&P too, isn't it?
Well, right here is the 200 day. This one that says greater than 200. That
Okay.
tells me that price is currently greater than the 200 moving average, which is right through here.
Okay, so it kind of hit that today.
That sure did.
Yeah, the VIX hit 65 today.
Right.
And some of the stuff I have at 51.73 is so far okay. So, you could build a somewhat of a cane. And today is Monday.
It's Monday all day.
And so Tuesday is turnaround Tuesday sometimes.
Sometimes.
So, it would be something to keep an eye on because, like I say, they are definitely liquidating people in a panic fashion.
Yes. And, uh, well, now I can't remember what I was going to say. Never mind.
Well,
Keep going.
and again, like I say, so that's basically going on now. The global markets are also throwing in the towels big time. I heard Japan was down 12% today, 20% in the last week or so.
Yeah, I heard that too.
That's a big drop, and so this is definitely affecting. And I look at all the international markets each week, so I'm looking at things like the emerging markets (EEM), and they're down. They're breaking down pretty well, but again,
Oh,
they're
that's
starting
a
to
good
see.
one.
Yeah,
Dropped completely below the 200, and then
yeah,
now it's bouncing.
yeah. And then the bouncing, and then Mexico EWW.
Not quite as bad, but still definitely down.
Yeah, but right now they're all getting into some support zones down here, which is going to be interesting. I mean, clearly the momentum is all down, and the trends have broken definitely on the 1 year graphs. But some of the long-term graphs are showing areas in my stuff that there could be some stabilization here. With that ISM number on services being above 50 and that VIX having to blow off to 65, you're certainly a little late on the train to be hitting it.
Yeah.
You're not a genius to start shorting now.
It could
And you
be
know what?
almost over, and then you're certainly not a genius.
And I'm definitely from the school of like the market makers like Citadel. They're taking in all this stock at these low prices, and they're taking in all this volume at low prices because I think they operate under the concept that when the volume drops, when all this selling has dissipated on a short term, it'll snap back under its own weight.
Mm-hmm.
So it'll be interesting to see.
Well, and when it's doing that, it typically puts in a basing pattern, and I'm looking for that basing pattern to form before I buy my stocks back again.
Oh yeah, yeah. I'm not talking about doing long-term buying down here. I'm just saying if you're a trader, which I'm assuming that many people are, taking a look at some of these calls that might be way, way down in price, that have a week or two to go on them. A bounce back in some of these calls, that are obviously way down in price. I mean, if you look at a call and it says down 85% in price, I mean, obviously that those calls have been aired out. So
Mm-hmm.
if you think 65 on the blow off on the VIX is it, and if you think 51.20 and 51.73 is going to hold up, and we're at turnaround Tuesday or turnaround Thursday later in the week, some of those calls could bounce back in price pretty dramatically. So I would monitor those absolutely.
Yeah.
You know,
Just
let,
want to
let's talk about let's talk because we obviously know what the stocks have done. Obviously, they had a growth scare. Obviously, the Psalm rule freaked everybody out, and obviously, everyone sold everything they could and bought bonds. Okay, that's what's happened.
Yeah. Do you want to see the bonds?
Well, yeah, we could see that because I had some support on the 10-year note at around this 375, 380 area.
Yeah. So they all ran into the bonds. You're right.
Yeah. And they panicked into them because yields
Yeah.
dropped 25 points on Friday alone. And when
Right.
people do things in a panic, like they're selling out of their stocks here or buying bonds, sometimes that's not the most intelligent thing to do, right?
Right.
So, but let's wonder about the things that might be affected uh, between recession and reversion, because I think that's the question today. If we're reverting, there's bargains to be had. If we're in a recession, plan on more rain, right?
That's right.
So let's talk about if it's a reversion, where could be some value. Let's look at crude oil. Because what I think would be good for everyone, I think would be good for everything, Sonny, is that we look at these markets and then we look at some stocks in those markets and see if there's anything there.
Yeah, that'd be good.
Yeah.
So here's the attractor because of this low back here in crude. And it looks to me like it's going to go on down to that attractor again at 70 and a half. Interesting.
I got today's low at, let's see what today's low was. So I saw a 71 handle. And so it might have hit that area today. Yeah, because we went as low as 71.67. So how close is that to that? Well, you're at 70.56 on that attractor.
Low was 71.67. Yeah.
Yeah.
And this attractor is at 70 and a half.
Yeah.
So it's just another point down. That's not a big deal.
No. And in fact, I've got a very similar point that jives with yours at 70.44, which is right in your neighborhood right there. So, I mean, and if somebody told you you're within a buck of what might be the low, obviously, starting to plan on maybe a bounce out of there wouldn't be a terrible idea.
Right.
And then one other thing is, because you're a futures lady, I still notice that there's backwardation. So we're looking at the September contract. Why don't you look at December and see if there's still a backwardation going on? That would be the Z month, right? And so that's cheaper. That's cheaper than the front, right?
71.14.
And we're in the 72s now, right?
Yeah.
So there's a little bit of a backwardation. It's certainly not as much as it was, but that does indicate a little bit of a tight supply situation. And again, if this is a reversion, I think those numbers we mentioned would hold. If this is a recession, they're probably going to get taken out.
I usually think of reversion in the reversion to the mean idea.
Yeah, exactly.
What do you mean when you say reversion? Because
I just mean that, like, this is what I was telling people. When we're at 5,700 and my moving averages say 5,200, 5,300, 4,500, 4,600 longer term, that thing's coming down. Because obviously, reverting to the mean happens all the time. And so right now, if we are not going to take out the 70 area, well, the reversion to the mean looks like it's pretty clearly going to go towards 76 or 78 at least, which would mean that there could be an opportunity either to trade it on the long side or, as in my world, pick up some calls on energy stocks and see if they're going to bounce.
Yeah.
But mostly what I'm doing with the options is strangles, and that's been the way to go, which means you do a call and a put on the same thing, and you wait for all heck to break loose. And obviously all heck has broken loose, haven't they?
Did that today, didn't it?
Yeah. And it's limited risk on both sides. So when you go to bed at night, to the penny what you're risking, which is a nice feeling.
And with oil doing this, do you think they've changed the price of gas? Not in my neighborhood.
That's the last thing they'll do, because obviously it's like any other, it'd be like rents dropping. We're going to have to go into a pretty serious downturn for rents to drop. You know what I mean?
That's true.
But let's look at some oil stocks and see if there's anything there.
All right.
And some of these have earnings coming up here soon. So let me look at that list, because that list is the one that's kind of interesting to me. I believe, let me see. Let's look at Oxy, OXY. And that's Buffett's favorite. And he sold a lot of stock, but I don't know that he sold any Oxy. He sold like a lot of Apple.
He sold 50% of his holdings.
Right. So, but I didn't hear him selling any Oxy.
I didn't hear any reports about it.
Yeah. So the bottom line is, if he's not selling Oxy, that could be tipping his hand on what he thinks of that.
Yeah. This looks just like the futures contract.
Yeah. Well, I think with the Oxy thing, it looks like, to be honest, that's why I'm doing the strangles on it. As you can see, the puts are working quite well. But the point is like I say, if the oil were to be bottoming at the 70 level and we weren't going to go into recession, this might be a neighborhood where this could have a reversion trade as well. But right
70,
now, this is the classic case of catching a falling knife, isn't it?
70s up here. Is that what you're talking about?
Yeah, yeah. So a rally
High
towards
over here.
yeah, yeah.
Okay.
Because we're down here in the 56 neighborhood, and if they announce earnings and it looks like they're making money, it's not really set up for that. And if people change their tune by the end of the week about how serious this quote unquote recession by Claudia Sahm is telling us, that could change the tunes as well.
Mm-hmm.
It's at I've got a 20-year graph and it's at an apex. This is why it's tailor made for a strangle where you buy a call and a put at the same time. I've
Mm-hmm.
got a lot of moving averages on my 20-year graph. You have a
Well, if you
20-year graph, don't you?
well, they don't call it a 20-year graph. You have to put up a weekly or a monthly. See,
Yeah,
this
monthly. Yeah, call it a monthly then.
this tells me how many ticks or days or weeks are in the bar,
Yeah.
and then I can go tighten it up, and you can see as many years as you'd like.
Yeah, but can you see there's a traffic jam on your sunny bands happening, and the
Mhm.
likelihood it's going to stay in there, forever is not exactly high. So
That's
it's
right.
either, it's either going to, you know, start taking out the 65 and 70 number and get moving, or it's going to go into the abyss.
Well, that I don't know abyss so much, but it certainly come down to the lower outer band.
That's what I mean. And you're talking more like 43 or something, right?
Yeah,
Yeah.
4268 is what that number is.
Yeah. And I'm sure that would correspond with taking out the 70 number on the crude.
Mm-hmm. Mm-hmm.
And that would be more that we're going into a recession.
Yeah.
Yeah.
And if you have enough moving averages in a chart, then everything's reverting to the mean because there's so many moving averages.
Yeah, 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 yeah. But
I just,
you look at different time frames, don't you? I mean, obviously when you're doing short-term trading, you're looking at the short-term charts. But
yeah,
having a perspective on the long-term chart helps you with the short term a little bit.
absolutely.
Yeah.
In my Sunny Side of the Street newsletter, I talk about the daily and the weekly and the monthly,
Yeah.
compare them and look for signals on the different time frames.
It is like a perfect storm in energy because the energy is at a critical zone down here in the low 70s. The stocks are all converging at a point where it's either going to give it up or you're looking at a bargain. And right now, obviously, giving it up is the higher probability.
Mm,
In other words, this thing breaking down to 40 something, the way it's trading is more likely than it breaking up to 70.
yes.
So, that's why, you'd have to be prepared for a good sized drop because it has lost
Well,
altitude.
we've also got one, two, three, sideways four, and a five that could come up into about here.
See, and that is really what no one is expecting and what I'm very focused on because I'm telling you,
Okay.
I mean, you can buy some call options on this stuff going out till December or next year for pennies on the dollar if that's going to happen.
Mm.
And it's kind of like that movie The Big Short when those guys were trading in their garage.
Yeah.
They made their money by saying, I'm going to buy options on things that people don't think can happen. When I'm wrong, I'm going to lose a little. When I'm right, I'm going to make a lot.
Yeah.
And that's exactly what happened recently in the stock market. At
Yeah.
5,700, if you told somebody it's going to be at 5,100 in a week, no one would believe you. So obviously, somebody could have bought some short-term puts for pennies on the dollar because nobody would agree that that's happening. If somebody would have done that, they would have lost a relatively small premium. And
Mm.
now today, they're cashing in the kind of money that really changes your life a little bit.
That's right.
So, so anyway, that's
I
pretty much it on the energy. One last energy one would be Schlumberger, because if they're going to look for oil, they're going to need drill bits, and Schlumberger SLB is a drill bit company.
A lot of people say Schlumberger,
Yeah, that's it. Yeah, I mean, yeah,
but yes, Schlumberger is right at the flat DMA. It's got
yeah,
4 bars on that thing.
Yeah.
So it's either going to break down and go to the lower band, or it's going to pop up and go to the upper band soon, because it can't sustain a no motion for very long.
Well, I'll tell you what we're doing today. You're planning the rest of my day, because as soon as this is over, I'm going to be pricing out strangles on all this stuff we're talking about.
Oh, cool.
Because, like I say, the jury is out, and they're going to come back with a verdict. And I don't think it's going to take a month to figure out the verdict on this stuff.
No, it won't.
You
It,
know.
it'll,
All right. Well, let's go over to your other favorite, and that's the yellow metal, gold. Because people who thought Bitcoin was a hedge on whatever's going on are finding out it's not a hedge at all. It's just digital Nasdaq.
yeah. And in my Sunny Side of the Street newsletter, I said, 3 weeks ago, I'm waiting for gold 2,500, and we're there
Yeah.
now.
Yeah. Well, I mean, if they're going to print money to stop the fall, and this fall has a lot of power behind it, because just think about how asset prices are. I mean, asset prices are very, very high.
Yeah.
The problem is a recession is like the Titanic. Everyone's going down.
That's true.
And gold's down $25 today. Now the dollar has lost value, so you would think gold would be up. People are panicked about the world, the economy, then you think gold would go up. But when you have a situation where, you know, a big slowdown is going to take the consumer possibly into a non-spending mode, then higher prices on anything doesn't make sense.
Yeah, you're right.
And I think
Nobody's
that,
going to be able to pay it.
yeah, yeah. So that's people are wondering, why would gold be down with this crisis of this and that? It's because if we're going into recession, and the Somme rule record is 13-0 since World War II.
Mhm.
So, I mean, she's questioning it and talking about this time might be different. But some people think 13-0 is a little bit more powerful than, hey, maybe this time is different. You know what I mean?
Yeah.
So anyway, yeah, but I have 2300 and 2350 as the most important lines in the sand, and I see you have a 2349 up there as a very important number.
2349 is the lower outer band, so that's at this level.
Yeah.
That's possible. But
Well, I mean,
I'm still,
if it breaks, you'd start screaming uncle, I think, right?
yeah, I'm still looking for 2,500 though. I
Yeah,
think, it ticked above it right here
yeah,
yesterday,
yeah, 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 yeah,
but it didn't hold it.
yeah. Well, again, it's all according to what this Fed does, and who knows what they do. I mean, inflation was at 9%, and they still were buying bonds and kept the interest rates at 1%.
Right.
And now we clearly have got a growth scare, and clearly we have a pretty reliable indicator that there could be a recession already here
Hmm.
or on the horizon, and they're still at 5.5% on Fed funds.
That's
So this is not the kind of group that you want to really be counting on. What you can count on is they can be very radical in their movements, going from 1% to 5.5, and then for all we know, they're going to go from 5.5 down to 3.5 in a month or two. You know what
oh,
I
I
mean?
doubt it. I doubt that.
But I'm saying,
But
if they did something like that, then I would go with the 2,500 or better, particularly if we held 2,350.
yeah, I think that they're going to stand by their 2% statement. They've said they will not lower interest rates until we get to 2% inflation.
Yeah.
Why does anybody? I mean, they've been saying that for years, and people keep
Yeah.
saying maybe next month they'll lower rates. No,
Well,
they
people want to bid up things. People want to think that either we have easy money or easy money's coming next week.
yeah. Well,
And
join my live trading room.
you live in California. I mean, every house out there seems to be going for 1 million through 2 million, 3 million.
Yeah,
The price of cars on all those highway, everybody on the Route 5 or Route 405, they're going 100 grand or more.
right.
You're going to go out to dinner and get a steak. You're going to be putting up 200 or 300 bucks, and
Easily.
maybe that is what they call excessive, and maybe the Fed kind of wants that to come down to 75 grand a car, a lot of $750,000 homes, and maybe we go out to dinner and we can keep it under 200 or 220 bucks. You know what I mean?
I wouldn't be surprised if we have another housing meltdown. or let's say real estate meltdown because of all the commercial buildings that are unoccupied, and they've
Right.
got to pay mortgage payments on those buildings every month, and they're unoccupied, and they're going to at some point have to say, I can't pay this any longer, I'm dumping it,
Yeah.
and that'll hit the fan.
And technology does that to people. Go ask Blockbuster,
Oh yeah,
So, I
I
mean,
used to know the guy that owned Blockbuster.
but you know what I mean. Netflix came along, and you can get everything on the TV and not leave your house.
Mhm.
And you pay them, $10. Or, would you used to have to rent one movie for $10 at Blockbuster, or $5,
That's
$3,
right,
whatever.
9.99.
Now you got like 5,000 movies in your house. You don't even have to go out of the house
Yep,
for a much smaller amount. So the bottom line is technology does that to people, and it's obviously doing it to commercial real estate because, it's a lot easier to not put on a tie and a suit and not drive to your office and not pay rent and not do everything else. You know what I mean?
that's right.
So,
Wear your
well,
comfy clothes and just hang.
let's look at a couple of metal stocks and see if there's anything there because we looked at the energy. Looks like the energy is right on the verge of something big. And
Mhm.
then let's look at the NEM, which is your gold stock. That seems to be
That's silver
running
right
into
there.
some resistance around 50. Tried to back off today to 45, and I think it's hanging in there in the 47. So,
Mhm. We're at
you know,
47.18 right now, and the low was looks like it's 43.97.
yeah. See, I was thinking if it can't get back above 48, 49, that it could slip down towards 40. And you got a number there of 39.
Yeah, possible. Well, this 39 is the 200-day moving average,
There you go.
so it could go to that. I'd kind of be surprised, but
Well, like you will be because I mean, it'll only happen if we break that 2350. So I don't think you're really counting on that. If
no,
that
I'm
were
not.
to happen, that would be a little surprising. And then, of course, if
Yep.
this thing started giving up the ghost, just like we're seeing today in stocks, when they start selling this stuff with no buyers on the other side, it can go pretty fast.
It sure can.
you know so this is another one. That's why I'm very focused on the metals and energy, because I think the opportunity for volatility to increase dramatically in those two sectors is pretty reasonable.
Hmm.
you know what about something like Pan America Silver, PAAS? That was losing some altitude lately.
Now look where this one is.
Yeah, this was a strangle idea that I had as well, which is panning out.
That's a good idea. And of course, I would draw the attractors at the preponderance of the prices that would be right in here. See how it hits it over here and it hits it over here, hits it
Yep.
again over here, and it drops below it today.
And so we got those metals. What about Freeport McMoran, the industrial metal? Because I did very well with IWM, which is the industrial ETF. Not IWM, I'm sorry, XME. XME. But we're going to get to that in a minute. That's the small caps. Yeah, see, XME was another strangle idea that looked like very good. And obviously, it's paying off on the put in a big way.
Yeah, that's a good one.
Yeah, and
And
that's
again, it's
obviously,
down to an attractor. It's exactly on an attractor.
yeah, that index includes Newmont, it includes Freeport, it includes Nucor, and I think it includes Alcoa, which means that the infrastructure play has left the building, and this is definitely pricing out like a recession.
Yes, it is.
You know,
Mhm.
they used to call it Dr. Copper. Will tell you what the economic future is because of you know, as copper goes, sometimes they think that's how the thing goes. But again, all of them are kind of, if you looked at the longer term graph, yeah, and you're looking at it now a little bit, this area that it's hitting is a neighborhood where it could stabilize.
Mhm. Good.
So I think, yeah, your yellow line there, it kind of hit today around that number.
Yeah, that's what I and you see over here it hits it, hits it, hits it again,
Yeah,
hits it again here. So that's
yeah,
preponderance of price activity.
yeah.
And now we hit it again. Usually when you hit something this hard, it'll come down below before it goes back up because it's just kind of like diving underwater. You don't land on the top, you land on the bottom.
Like I say, that ISM services thing that came in above 50 has called the dogs off on a lot of these markets.
Uh,
There's no doubt about that. And of course, people who are short, they're looking for a reason to take some gains. That ISM number was a reason for them to grab some money.
mhm.
So that created a little bit of buying pressure.
I can't,
Um,
I can't follow along. You're so smart. I can't follow along with what you're saying. So you know so much about so much. And
yeah,
I know one thing, how to trade sunny bands and make money.
well, that's exactly right. That's exactly right. And that's what you want to know. But it's also nice to be a little bit aware of these other things. Like with the options, you're fighting against time and price. So if I'm in puts up there at 61 and it goes down to 54, and I now only have 6 more days on the clock, you don't play games, you grab the money.
That's right.
So
I
that's,
understand that part.
yeah, I'm sure you understand that part. Because there's a difference between real money and paper profits, and you got to make sure you got some real money coming in at some point, right?
That's true.
All right.
Helps
So
pay
anyway,
the
let's.
bills.
Why don't we look at the big guys? That you always like, and let's see if there's a bargain there on the Microsofts and the Googles and the Amazons. The stuff that you generally lean.
Magnificent Seven. That's what I trade.
Yeah, exactly. So let's
Yeah.
throw those up there and get your ideas.
Here's Microsoft. I've already got the attractor on there. It came from back here and over here and very
Mhm.
close right here. And that's where it landed today.
Mhm.
Down 10 points right at the moment. And as I said, I'm not going to buy that until it puts in a base. I want to see it
Yeah.
just kind of go sideways, bouncing up and down in little moves, not great big ones. So if it doesn't hold that, it's coming on down to this level right in here.
One thing I explain to people and you explain to people is, when we work with these moving averages or sunny bands, if you're going to make a lot of money on something, these bands or these averages are pointing up. These bands and these averages are not pointing up any longer.
Nope,
So these stocks are not, right now, you cannot count on them to be higher month over month any longer.
that's right. And it could just as easily come on down and, well, look, so we've got a Fibonacci line down here,
Yeah.
way down.
Yeah.
So that's at 340 and we're up at 390 something.
Yeah.
That could be another 50 points down.
See, the buy and hold strategy when the market has all the averages and the sunny bands pointing up is a lovely strategy.
Right.
It becomes a little bit less than wonderful when they're all pointing down.
And so that's when you want to be short. When the purple line comes on top, when the gold line's on the bottom, that tells me we're in an overall sell market.
Mm-hmm.
And so purple on top, we're going to go short, short, short.
And it is tough to do after the fact trading. And, if you're just starting to think about cutting back on your Microsoft, you're a little late on that idea.
Yeah.
Yeah.
I sold everything on the 11th. Is that the 11th? Yeah, on the 11th of July is when I got out of all my stocks and into cash.
Right.
And I told everybody in my sunny side of the street what I had done. And now they're wondering how I knew that.
Yeah. Yeah.
Right there, it's the Sunny Bench rule.
All right. What about the other guys?
Okay, let's see. Let's look at Meta a second. This one was all over the map the past 2 weeks. Look at this. It's down and down and way up and then down. And now it's down 11 points. That that one scares me. I don't know what that was about. Probably news of some kind or earnings or something. But
More than likely, it was the earnings, right?
yeah. And this is going to come down to this blue line, I think. That's a Fibonacci line. And I think we're going to drop another 23 from, yeah, another 20 or 30 points.
Yeah, I mean, just to put in perspective here, I mean, my long-term averages on Meta, look using the long-term graph, I mean, they come in at like 420, and if there was a full reversion, some kind of if there was a recession and we had a full reversion, you could see a 300 number on that thing, and don't act like it can't happen, because it went from 350 in 2021 all the way down to under 100 in 2022. So
Yeah.
it's not like these things can never happen.
No, everything can happen.
Yeah. But I mean, obviously, since the January of 2023, if you picked it up at 100, you've had a fantastic old ride up here. But, you don't want to ride the escalator back and forth and end up nowhere.
True.
Yeah. What else you got there?
Well, let's see. Let's look at my favorite one. This is a tradable. It's not an investable yet, but Tesla is definitely fun to trade. It goes up and down, up and down, up and down, over and over and over again. It's very volatile. And I had a whole bunch of it during this run up, and right there's where I exited that one. And now it's dropped below the 21 moving average and below the dynamic moving average. So it dropped straight down into there. And now it's dropped even further. Today it's down only 7.3.
It's a market, when people look at the graph like that, you really have to make your decisions when you're supposed to make your decisions. And
Yeah,
we were supposed to make your decision when it was in the 160, 180 neighborhood on
right.
the buy side. And then you were supposed to make your decision up in the 250, 260 range on the downside. When
Mm-hmm.
you look at a stock right there and you're trying to make decisions on it, in my view, you need your head examined, because who knows what it will do right now? You could build a case it could have a snapback rally. You could build a case it's going to go into the abyss.
Absolutely. But I don't build cases. I just follow the Sunny Bands rules.
Well, yeah, again, though, you wouldn't consider this a great entry level to buy or sell, would you?
Well, I sold it right here as it
I'm
passed.
talking about current prices. I'm trying to make
I'm
people
not
look at.
touching current
Yeah,
price.
exactly. I'm trying to get their perspective on, when something looks like that, it's not an optimum time to be making decisions. So really, you should take your eyeballs and focus on something else, right?
That's right.
You know, but that gives you an idea that if you do act at a time that's appropriate, that there's activity there that can be very helpful to you.
That's true.
What else we got?
Oh, let's see. Apple. I didn't start at the front of the alphabet. So Apple's down. That's the Warren Buffett sale
Yeah.
there. And look where it went. Look at this price over here. And it went right to that same attractor.
And I guess maybe what they're saying here is, after their worldwide convention, which I was fortunate enough to strangle before it happened at the 200 strike, um, and we ran all the way up to 237. That was all after the convention they had, and it was all about how they're going to put this stuff into their phone with AI, and the world
Right?
is going to stampede down to the Apple store to throw in their old phones and get the new one. That's the story of 190, 160. Actually, that's the story from 165 to 235.
Uh-huh.
The expected stampede at the Apple store, people throwing their phones on the counter going, give me the new one. And now I think what's happened is the AI thing was delayed from September to October. Not a big deal. But what people are thinking is, if we're in a full blown recession by the end of the year,
You're
people
right.
might say, you know what? I think I'll hold on to my old phone, because the new phone is nice, but it's not nice enough during a recession to blow out and buy another one.
That's right.
So that's
Yeah, if we are in a recession, there's going to be some people holding tight onto their money.
exactly. And believe me, 70% of the economy is consumer spending. That's why every time you go to your inbox, there's 19 credit card companies trying to get you to borrow,
I
whether
know.
you have a job or not.
Right.
So obviously, consumer spending is a little important, and if it does pull back quite a bit, then obviously, you know, well, the valuations can't go, they can't be maintained. And we know we have high valuations. So you can't maintain valuations if, in fact, the consumer pulls back. You're not going to be able to maintain earnings or earnings growth if the consumer pulls back.
Right.
So, there is a multitude of problems for the stock market if the consumer pulls back.
That's
And that is, and then of course, the unemployment rate could change, because obviously, if the consumer pulls back, you don't need as many people to service less business. So there's a real what do you call it? There's a real snowball effect to a lot of that stuff.
It's true.
To be honest with you, I always am amazed how our economy and our whole economic system is based on people just continuing to probably spend more than they should.
Yeah, and they buy on their credit cards and then they can't pay off their credit cards.
Yeah.
And, I don't even have any credit cards.
Now I'm a debit card guy myself. I figure
Me
I'll
too.
spend the money I have, not somebody else's money to borrow.
Right, right. That's only makes sense to me.
But there is people who are, less liquid like that, and they want to keep up the lifestyle that they think everybody else is living. And
It
so
just
rather
gets
than
you in
making the
trouble.
admit, yeah, rather than making the admission that they shouldn't be buying things, they throw it on the credit card, and everybody looks like, because everyone's leasing cars, right?
Yeah. I figure you should buy the best product you can get, So if
Yeah,
you have to buy a car, buy a Mercedes. So I drove a Volkswagen Bug for 13 years until I could save to buy my first Mercedes.
right. All
So,
right. So what are we else? What else are we thinking here? We see
oh,
there's
let's see. We
panic
didn't
in
look
the
at Amazon
bond,
yet.
huh?
We didn't look at Amazon
Oh
yet.
yeah.
We got that one.
Well, that can't be helped by the fact that consumer might be dried up, right?
Well, that's the worst one, probably.
Yeah, because
We
that
buy
that
everything on
yeah, yeah.
we buy everything on Amazon. And
And
there's the
then and
tractor for
then I
Amazon.
guess maybe the AI trade is losing its steam also because how much AI do we
Yeah,
need if business slows?
that's true.
I mean, I don't need 9,000 efficiency AI things if there's no business to be efficient about.
Right. Well, the more they can use AI to turn it into a robot driven industry,
Yeah,
you flip your burgers at Jack in the Box on the robot.
yeah, and that's coming, I'm sure. But I mean,
Well,
I
they're
don't.
already doing it.
Yeah, I don't know how much that saves. They only paid the kids. I had a couple of kids working McDonald's a few years back. They were paying $8 an hour. I said,
Oh,
"You're getting $8 an hour, and you guys are what? Taking the orders. You are making the orders, and you're upselling the people."
yeah.
And McDonald, I think, announced earnings last quarter of some billions of dollars.
Oh, amazing.
Apparently, the trickle down theory, where the employees who do all the work actually get the money, isn't really happening in the fast food
No,
industry,
that doesn't happen in
in
any,
any industry.
no.
Yeah, but
And
it's yeah, yeah,
we're making $15 an hour at McDonald's out here.
yeah. Oh yeah, no, I'm sure everything has changed. This was a number of years back when they were in high
Oh,
school. Yeah, but I'm sure it's at $15 an hour. There's not a lot of homeowners in San Diego County with that job.
no, no.
I don't think they're leasing too many Mercedes with the 15 an hour, right?
I don't think so.
Especially after Gavin Newsom gets his piece.
Well, the state tax out here is 10%, so
Yeah,
that's a killer too.
yeah. Well, as long as you keep the climate, you'll still get people to come, right?
I'm afraid so.
Yeah, because that's why people go.
I used to have a bumper sticker that says "Welcome to San Diego. Now go home."
Yeah, exactly, exactly. Okay, well, let's talk about what you do, a little bit,
All right.
a little background on yourself, and how people can get a hold of you, and what you're going to do for them when they do that.
Well, I am a mathematician. I've been trading for 43 years. I also a programmer and author of 9 books, including the new definitive guide to TradeStation's easy language and OOEL programming. I am happy to be your mentor, tutor, or consultant. I love to teach people how to trade, and I make it easy. All I do is show you how Sunny Bands works, and then you can trade. No, that's not true. I teach you everything you need to know from the ground up. And I'm an easy language programmer. If you want something programmed, give me a buzz. My number is 760-908-3070. And if you want a free entry on Wednesday to my Trade Along with Sunny live trading room, just text me to that phone number, TAWS, Trade Along with Sunny. So just text that and I'll get back to you and we'll set you up so that you can watch me do it on Wednesday. And this morning we made in the 1 hour trading room, we made 5,093. So that's not bad hourly wage. And I also do a podcast of famous and legendary gurus. Jim's been on it. And Sunny Side of the Street every Sunday night. And I think that's all I do.
Yeah, well, that's great, and obviously people should check it out and see how you can help. I have one customer of mine that had a question about the what do you call it? The complication of Sunnyband. So, can you briefly explain how when people call you, they can get a further explanation on Sunnyband so they understand kind of your methodology?
I'd be happy to do that, yes, but I don't reveal the mathematics. So now and then somebody will call and say, I can't use it because I don't understand it. I have to know all the formulas. Well, we'll have to part ways because I don't give out the formulas.
Right. But you can
I can,
understand basically, you have at least a layman's terms of the basic idea behind the formula.
I have one better than that. I have a little document on my website called Sunnyband's Rules,
There you go.
and it tells you exactly how I trade it.
Yeah. No, I agree with you because, like, even with RSI, people want to get into the minutia of RSI, and I try to explain to them, it's kind of like your speedometer on your car. If it's going
Yeah,
a certain miles an hour, it means something. If it breaks above a certain mile an hour, it means something. And everything else,
and
as
you
far as
don't
the
have
minutia, is
and
not
you
as
don't have
important.
to know how the speedometer works in order to trust that 30 was 30.
Yeah, and everyone has a speedometer, so I think at the end of the day, the light goes off in their head, going, "Right, I get it now. I get it now."
Yeah, yeah, that's a good.
I was wondering if I could just quickly mention about Option Professor here at the top of the hour, because I've got some things going on in this last year here that are totally different than what I've done in the past. And I don't know if David could put up a link to the Option Professor, not the website, but how they could sign up for the alert. There you go. So here's the deal. I've been sending out alerts and weekly updates, and then suggesting people have a 1 hour session with me. And then the problem with that had been because after the session, you might forget everything we talked about, and you didn't really get any ideas because we were just talking about, how options work and how you can trade them and this and that. So now I've got an options alert service where you get a 3 session, 6 hour options masterclass right up front for free. And this class has a value of $397. So that's the first thing you get. And then every week you'll get ideas that I have, and they're ideas that a lot of it have to do with strangles, and that's where you do calls and puts on the same thing. I find that to be a very effective strategy because these things, when they move, they can move up or down or both, and you can actually get action on both sides. But I also go over credit spreads if you're looking for cash flow and long-term options that might have significant value. And again, you also get my commentary on the stock market, interest rates, gold, oil, the international markets, Bitcoin. You get a lot of information each and every week. And the normal rate on this is $197 a month. And for people who are new subscribers now, I'm cutting that down by $100. So it's only 97, and it's month to month. So if you do sign up, you get the free class that you can keep. You get a month worth of information that you can determine whether or not it's helping you. And then you can unsubscribe if you're not finding it to be helpful. So it's a pretty low risk $97 deal. And there is a link that is on the in front of you that if you click that link, you can get this week's report that I just sent out. And of course, you can get that options masterclass sent out to you immediately. And a lot of you people need a lot more information on options, but you need a longer course, and you need something that you can go back to and look at a video. And then, of course, if you have a question, you can email me any questions. So it's a very good deal. I set it up that way, so it's kind of a no-brainer. So if you click that link, you can get started. And thank you very. Oh, I got the lady telling me it's 11, so that's that. Again, get a hold of Sunny at moneymentor.com and see how she can help you. And then consider signing up for the options alert. I think you'd be very happy with it. Back to David, and thanks a lot, Sunny. Again, we'll be doing this again.
Thank you, Jim.
Yeah,
Excellent.
we always like to have our session.
We do.
Yeah. So thanks
All
a
right.
lot. Yep.
Yeah, great discussion today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, and also now on Substack. And you can just search for Timing Research and find it there. Also on TimingResearch.com, you can access the past shows and presentations there as well. So just want to thank my guests again for today, Sunny Harris of MoneyMentor.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.
Thank you, David.